So there's a lot of panic going on in crypto right now. Tokens absolutely nosediving, FUD all over the crypto timeline. And one of the biggest indicators that we use here on this channel even is flashing a massive warning. So in this video, we're going to break these things down one by one together so we have a nice macro compass in order for us to trade within with a lot more confidence. So let's start with what is wrong. I mean, Bitcoin has had a massive pullback. This is over the last 7 days from $120,000 dipping under $113,000 this morning. Also, we're big fans here of altcoin season because although Bitcoin is the best store of money we've ever actually had, and you can get monumentally rich just trading Bitcoin, we like the 10, 50, 100x's that the altcoin market give us. Once Bitcoin drops off a cliff like it had been doing recently, it actually went down below the 61% range, allowing some altcoins and meme coins to 5 and 10x. But recently, it has been heading back up towards that 62% level. And a lot of tokens today are in the red, and all this week are also in the red. You can see actually the biggest pullbacks on tokens if we sort by 7-day pullbacks. A lot of the top memes are down up to 30%, which is a hefty amount for just 1 week. And even worse, like we're saying, the altcoin index has gone away from altcoin season. I think it peaked up here at about 65 or 60 right there. And now it's pulled back to 43, heading back towards Bitcoin season. Fear and greed is in the neutral zone after being in the red for so long. We are starting to dip. And most of all, the number one indicator that we use on this channel and what I'm going to be going through in this video, the M2 money supply, which has a 90% or actually an 88% predictive correlation to Bitcoin's price, has just had one of the biggest pullbacks it's seen for months. So, was that the top of the market? To answer this question, we need some expert advice. And Raoul Pal came up with the M2 money supply, which is what we're talking about right here. This is the M2 money supply. I'll talk more exactly about what that is and how it's going to show us the top for Bitcoin with a 90% accuracy. But Raoul Pal sort of brought this onto the scene. I then heard of it from House of Crypto, and the guy who breaks this down the best for me on Twitter is called Colin Talks Crypto. I think he's a crypto OG guy. And we're going to be using his frameworks today and going through exactly what he thinks, because he's been absolutely crushing his predictions in the macro based on what we're about to show you. On Twitter, Bob Lucas wrote, "I believe there's 2 to 4 solid weeks left in this Bitcoin weekly cycle before a top." A top is what we don't want. A top is when it peaks and then goes back down. Colin Talks Crypto, who is our macro expert, says a local top, of course, yet to be determined if it's a final top, although he thinks it is not. I'll show you why in just a second. He replies it here. The part-time trader says, why most likely not a final top? Colin Talks Crypto says, for one thing, sentiment is super low and there's no euphoria in sight. In fact, Colin thinks the actual top for Bitcoin, and therefore the altcoin run as well, is about 6 months away. He believes we have plenty of time. Stop panicking, stop selling as charts are tanking. It happens every 2 or 3 months as a shakeout for the weak hands. Sit back, relax, and enjoy the euphoric banana zone of the final 6 months in a 4-year cycle, which are where most of the money is made. Colin says, once again, sentiment is still super low. See chart 1. Now, if we go to chart 1, we can see what's called a historic social metric risk. And you can see basically, Colin says, think of social risk score, which is the red line here, as social sentiment. And right down here in 2025, you can see we pumped up early in that January run, and January run that did really well for us. And now we're almost back down to zero. There's almost no attention back onto crypto at the moment. He also says all technical indicators are wildly bullish with a lot of room to run up. Bitcoin monthly candle breakout, CBBI relatively underheated. I'll show you that in a second. Global M2 money supply hasn't stopped climbing. It did for the first time. Again, I'll show you that in a second. And S&P 500 just broke to new all-time highs. Government and corporate Bitcoin treasuries have barely even begun. I think we'll see that hype in full swing as we move close to the top, which is a long way away, 6 months from now. This post, guys, just to give you some date reference, was July 24th. So this was about a week ago, which means we're going into 2026, according to Colin. And on Colin's website, he actually built this tool. It's called the CBBI, Bitcoin Bull Run Index. And the bigger this number, or closer this number is to 100, the more confidence there is that we're at the peak of that cycle and it's going to crash from there. And you may be thinking, 79, that's closer to 100 than it is to zero. Are we close to the top? Well, Yes, but also, and you can see these are all the factors that Colin has built into this. And you can see historically, back in 2014, it picked the exact top. The confidence was at a 99, basically as Bitcoin was at its all-time high price of $1,100. And then in the 2017 cycle, confidence 99 as Bitcoin peaked at 15,000. I think it hit 17,000 total in that bull run. And then the 2021 confidence at 97 when Bitcoin was 61, it went on to hit 67. So these indicators have proven to be extremely accurate. And you can see right now we are sitting at 77. Again, that seems scarily close to the top. I came in here, I was like, wait a second, 6 months, we're like 4/5 of the way to the top there. But have a look, if we go historically, where we were, say, confidence at 79, which is where we are now, Bitcoin price was 4,500, where it peaked at 17,000. Most of the gains, and we'll do it again for this next cycle, when confidence was 78, Bitcoin was only 29,000. Remember, it peaked at 67,000. Most of the gains are seen in that last fifth, from 80 to 100. And this is what euphoria actually feels like. This is what a top of a bull market feels like, when literally everyone from Justin Bieber to Jay-Z are buying the tops of NFT markets. Franklin wrote in 2022, I got a $1.16 million offer on his profile photo, which was a Bored Ape at the time, a gold Bored Ape, and he did not accept it. This is what the top looks like. It does not look like what we had last week, where literally the social sentiment was so low. And the M2 money supply is the biggest thing that shows that. Again, this is Colin Talks Crypto script, which I put into TradingView in order to see exactly what he talks about in his videos on Twitter. And you can see the correlation between M2 money supply, which is the amount of money printed around the world from either banks or governments that are literally creating money out of thin air, and then giving it to the big institutions, the banks, the top level investors, for them to go out and stimulate the economy and spend. This money has to go somewhere, and it ends up with a 90-day offset. You can see up here, I've got 90-day offset, and that's why you can see M2 money supply into the future. And the reason that is, really quick, and then we'll talk about the direction of Bitcoin and how it's going to have a massive pullback, is because this is how the US dollar and every other currency is distributed. First of all, you have the central bank in the way of real money. So you have fake money or fiat money. The first recipients of fiat money, say when the US Fed print $1 trillion, are governments, Wall Street, and mega corporations. These corporations, traditionally at least, they are starting to now, do not invest in high risk assets such as Bitcoin, or what Bitcoin is classed at. Then you have lower tier banks and small businesses receiving their currency. Then you have the last recipients. This is called the Cantillon effect. The poor, retirees, pensioners, and the most economically vulnerable people get that money last. And they get that money when it's worth the least, because it's already been spent plenty of times in the economy and therefore diluted the dollar. But because they are the most economically vulnerable, they need to invest in riskier and riskier assets. They need to go down the risk curve into emerging markets such as Bitcoin to try and make up for all the money that's being stolen from them, from the people up the pyramid from them, which allows us to predict the movement of Bitcoin and other assets, riskier assets, with a 90% accuracy 90 days in advance. And you can come in and change this if you're loading the script yourself. It was 75-day offset was the closest, but if you load that in now, you can see that's a 78% correlation, and it's actually shifted. The money is moving down this pyramid slower than normal, and it's currently, according to Colin, which is looking pretty accurate for me, is at a 90-day offset, which means we can see the incredible increase, the surplus of money that has entered the world, all the economies all over the world. China has been printing trillions. The US is yet to print, which is the bullish news for us because they are not factored into this massive upward candle, and they are the biggest economy in the world, remember. And so if this correlation continues, we can see Bitcoin ascending into the 150,000 plus range. But we do need to be careful, because this is the big warning, the big alert that is flashing for the first time since late December, the 28th of December, 2024, where non-coincidentally, we had a massive pullback in January and February and March of the price of Bitcoin and altcoins. This is the first time, however, since then that we've had such a massive pullback. Even the pullback that we're experiencing right now is either one of these two things, where all the tokens are starting to dive and even stocks are down a couple of percent in a day, which is big for the stock market. These are way smaller compared to this massive pullback that we have seen. And so Colin is asking, is this pullback, and he talks about in this video if you want to go watch more in depth, is this pullback the sub peak or the final top? And as we already have spoiled, he thinks the final top is 6 months away, and this is just going to be a big pullback that you have to be very aware of, because Bitcoin could dive $30,000. Altcoins could lose 40% based on this big pullback in M2, before obviously continuing on for another 6 months if this is going to keep going up. And I showed you this in my last video. If it is the final top, we're going to see the best prices on altcoins in about 2 months from now, end of October, before it starts diving. And of course, you have to be extra careful, because this is what I'm learning as well, is Bitcoin tends to lead M2 money supply when markets turn around. So historically, in all the bull markets, you cannot just follow M2 and wait for it to turn around before Bitcoin does, because Bitcoin is actually leading the M2 when it comes to retracting or going down. And so you're going to see the maximum 2 months of bull market left before it goes lower, if this is the final top. However, it's most likely, Colin says 97% likely, this is just a sub peak and we're going to continue on. I put 350 up here. We don't know how high we're going yet, because we can only see, again, 90 days in advance. But even today, like if you have a look at Colin Talks Crypto on Twitter, this was just yesterday when it was in a downtrend, and even today it's starting to turn around with a very sharp flick in Bitcoin price, which this is not an actual accurate scale to Bitcoin, but if it was, it'd go from 168 to about 175, which is a strong turnaround in just a day. So I personally would love to see this thing keep flicking and ascending higher for the next 6 months, so we get the biggest bull market, the biggest super cycle that people think we are going to have. And therefore, the altcoins will absolutely fly, because that is what we are all here for. And if we zoom out on that Bitcoin dominance chart, although we are back above that 62%, you can see when put into perspective, it is the tiniest little wick on this tiniest little green candle that people are worried about. And if you have a look, say the 2021 market, there was a lot of range on these wicks from up to down. And even back in the 2017 market, where we went from 56% all the way back up to 64 before dropping all the way down to that 42% range, where every single bull market in history has ended once that Bitcoin dominance hits that 42% range. And liquidity will flow further down these risk curves into riskier and riskier assets. But when markets have pullbacks, as they have this week, you're going to see more volatility in the altcoins. The slower moving tokens, the ones with the bigger market caps like Bitcoin and ETH, are going to see the least volatility, which means when we're going backwards, you're losing less money, but when we're going up, you're missing out on gains. So you want to play that however you see fit. But the two big things to know is that Colin thinks we're 6 months away from the top, and we'll be keeping an eye on the M2 money supply. Make sure you follow us here, subscribe to the channel, so I'll pass the message along as the M2 continues to lead the Bitcoin price. And secondly, everything when priced in Bitcoin is going to zero. So if you're out there panicking, being like, oh my God, I shouldn't invest in crypto, where are you investing? Are you investing in dollars, S&P, real estate, gold, crude oil, Big Macs? Probably not. But over a long enough time frame, everything that is not Bitcoin is going to go to zero. Except the one exception here is MSTR, which is backed by Bitcoin. It's a leveraged trade on Bitcoin. That's the only way out, is to adopt the Bitcoin standard. Even over the last 30 days, while people have been panicking, and this was published today, so it factors in the big pullbacks, every single other asset is down against Bitcoin. In the last year, you literally would have lost 40% on almost everything. Gold is the only thing, and you'd still lose 22% of your money. So you're in the right place. You just have to know the macro thesis and how to play this. Time the market right. Make sure you subscribe. We'll keep you in the loop. Thanks for watching. See you in the next video.